Hello, everyone, and welcome to part five of our investment education series for teens and young adults. My name is Steiner Jewett, and I'm a certified financial planner as well as our trader here at Illumination Wealth.
Hi everyone, I'm Heidi Von Peterson, and like Steiner, I am also a certified financial planner at Illumination Wealth.
So, as I mentioned, today is part five of our webinar series, where we'll be discussing a couple of different topics here. We have the market, economies, and also trends. We're going to be giving you a lot of information today, so we'll have a couple questions for you to think about as well, and then let you know about our next webinar that's coming up later in December. If you have any questions throughout the presentation today, feel free to email them to us. We'll give you our contact information at the end of the presentation. Now we can just hop right into the agenda, where today we'll be talking about markets. What are they doing? Why do they matter? How markets work from a basic level, basics of the economy, how the economy grows and also slows, the stock market versus the economy, how they're similar, how they're different, talk about different trends, talk about how trends shape markets, and then finally the connections between, our big three topics of markets, trends, and the economy. How do they all work together? And then we'll get to kind of action steps and things for you to all think about. And then, like I said, questions and answers that you can send to us afterwards. So I'm going to pass it on to Heidi to discuss, an introduction to markets. What are they and why do they matter?
Thanks, Steiner. A market is made up of buyers and sellers. So each is looking to make an exchange of a product or service at a price that's acceptable to them both. So this chart shows types of goods that are typically exchanged in a market. Goods are probably the thing that comes to mind for most people. We all buy clothing, electronics, and groceries, and pretty much just everything that we need for living our daily lives. Market exchanges don't have to involve cash. Trading baseball cards or a ride to the airport is also an exchange that doesn't involve cash. Another type of good that everyone here probably is familiar with is labor. And that's when we go to work, we have agreed to provide our skills for the price that the employer is willing to pay. Office workers like Steiner and I, we provide knowledge-based skills. A babysitter might provide, should provide childcare, and a skilled barista provides the ability to make a mean cup of coffee. In addition to the more commonly known goods, there are also markets for investments such as stocks and cryptocurrencies. As we went over in a previous webinar series, a webinar in this series, when you buy stocks, you're buying an ownership share in a company, and when you purchase crypto, you're purchasing a digital asset. So here's a question for everyone to think about. What's something you or your friends have traded or sold, and what made that trade fair? So we'll give you a few minutes to think about, not few minutes, we'll give you a few seconds to think about those some examples.
Yeah, and while you think about those examples, we can jump right into an example that we've come up with, which is, a lemonade stand. A lemonade stand is, a really good example, a very simple example, and something that, almost everyone's familiar with. So on the left here, we have, a hot summer day. Um, you have a bunch of people in line to get lemonade. There's not a lemonade left. And as you see on the sign, there's $2 per cup. Meanwhile, on the right, you have only $1 per cup, but it's a rainy day, not very nice outside. There's a lot of lemons left over, a lot of lemonade. Um, and this is just a really good example of showing, supply and demand to a very high level. So on the left side again, the very nice day, there's a lot of demand there. And so because there's a lot of demand, there's not a lot of supply, the price of that is going to go up. And meanwhile, on the right side, that's, completely the opposite. There's not very much demand. No one's in line for the lemonade. They have a lot of supply. There's lemons left over. And because of that, the price is going to be lower. And so
Yes.
this is just, also how exactly how a market would work. It's the basics of supply and demand. It's a balancing act between what people want, what's available. When not very many people want it, there's a lot of it, the prices are going to fall, and the exact opposite. If there's a lot of people who want something and not a lot of it, the price is going to go up.
Thank you, Steiner. That was a
And
good
then
example.
Yeah, and just to go off of that, we can kind of jump into an intro to the economy. So that was a good example of how markets work. Now an intro to, how the economy works. And the economy is how money, goods, and jobs move throughout the world. The economy is a bunch of different factors working together. So we have households, we have businesses, we have government, we have jobs and money. And so before we get into that, who has ever earned money before? Maybe from chores, from babysitting, from selling something. If you have, that means you're part of the economy. So getting back to what this loop looks like. So let's say you earn money from
Oops, sorry,
babysitting. No
jumping
worries.
ahead.
No worries. You earn money from babysitting. Then you go spend it at a store. Then the store pays its workers. Then those workers go and buy food or clothes or the goods that Heidi talked about earlier. And it just keeps going and going in sort of this endless loop. Then we also have the government as another small piece of this, where the government helps, build roads, build schools, build hospitals, so that these businesses can and people can keep working, keep trading, keep living their lives. And so when we have more people working and spending, this is going to lead to the economy growing. A good example of this is when you're riding a bike. This is when you're pedaling really fast. The economy's growing, you're pedaling your bike faster. Then on the flip side, when people are spending less, then things are slowing down. You can think of this of you going down a hill and eventually coming to a sudden stop. And so now that we have a better example and better understanding of how everything's connected in sort of this loop that we have here, let's see kind of what makes the economy speed up or slow down.
So, as Steiner mentioned, the economy goes through cycles and fluctuates. This is due to a variety of factors. It expands when people and businesses are doing well financially and have more money to spend. This creates demand for more products and services, which then generates more production. So then we're heading up this curve. Um, to produce more, companies have to hire more people, and that creates job growth and increases in income and everything's great. So then, we're going up. And then we reach this peak here. And unfortunately, there is such thing as too much of a good thing. And this is one way to explain how and why the economy heads into a decline. What happens is that as demand continues to increase because everyone has money to spend, and eventually, while everything is going great, things start to get more expensive because companies have to compete for workers and materials in order to meet the demand. So this leads to higher costs for goods and services. And since costs tend to rise faster than income, consumers start to feel the pinch when their grocery bills go up and the cost of living in general just gets higher. And then we're experiencing inflation. What happens when this happens? Consumer confidence slips and people put big purchases on hold and credit tightens. And then the Federal Reserve might raise interest rates to fight inflation. And then this causes companies to delay investments. So as you can see, this can create a bit of a downward spiral as behavior by market players, meaning the consumers and businesses, ripples through the economy. So then as spending falls and production slows, companies have to lay off workers. And as workers have less income, they cut back on spending and then demand drops further. So as you can see, eventually this chain of events takes us to a low point in the current economy. This cycle just keeps going like this. So now we're over here, and this down to this trough where we've kind of reached a low point. Eventually, as the cycle continues, the economy will stabilize again, and then we'll start moving back up the graph again. So while the cycle repeats itself, what is hard to say is how long we will spend in each of these, each part of this cycle.
Yeah, and I think a good thing to talk about too, Heidi, is, where are we right now, on this chart?
Mhm.
And it's hard to tell. Like no one really knows while it's happening. It's easy to tell, what happened in the past. And so I think
Hmm.
a good example is like when we think about COVID, is like once, the stock market dropped, kind of everything stopped all at one time. That was, very simply, a very, very big down market. The trough was probably right at the start of COVID. And then as we kind of recovered from that, even until now almost, it's been an expansion for the most part. And then we have, now it's, are we still expanding? Are we getting to the top of this peak? We're seeing some volatility in the market, some volatility in the economy. And so I think right now it's pretty hard to tell where we are. But I think it's safe to say we're somewhere in the middle of the kind of expansion to potentially a little bit of a peak here
Hmm.
right now.
Yeah, I think there's a lot of speculation around
For
this.
sure. For sure. And kind of just a good, cycle to that then is, what is the stock market versus what is the economy? And so a really common misconception is that the stock market and the economy, are the same thing when they indeed are not. And so while they are, very much related to one another, and some people might use them interchangeably, the economy is what is currently happening versus the stock market is more about what people think will happen. So we have the economy where it's people working, people earning money, people spending money. It's their jobs, goods, services, kind of that cycle we talked about before. And like I said, it reflects what's actually happening versus the stock market, as you might remember from some of our previous webinars, is, investors buying and selling stocks, bonds, cryptocurrencies, things of that nature. It's also, predictions about how they think companies are going to do in the future. The whole point of investing is hopefully that your money, makes money on itself through your investments. And so it's really about predicting and feeling what you think the future is going to come. So kind of just to reiterate, the economy focuses on those real jobs, real spending, goods and services. Well, the stock market is, more prediction, investing, what people think is going to happen. And one final point is the stock market often moves before the economy does, because it is those investors trying to guess or predict what they think is going to happen. So the economy could be doing really well, and maybe the stock market starts to trend downwards. That might just be more investor sentiment or what they think is going to happen to the economy going forward. Now I'll pass it back to Heidi to talk more about, these trends and what they look like.
Okay, so what are trends? Trends are patterns that show how things are changing, reflecting on people's behaviors and preferences are shifting. So, um, an economic trend tells us whether the economy is mostly growing or slowing down over time. And that's based on patterns in how people spend, work, and produce. The trends are important because they suggest where the future's heading. It helps investors to spot opportunities for growth and also helps businesses adapt before change actually happens.
Yeah, and let's jump into, a really good example of trends and how they shape markets. So trends influence production, they influence new technology. When consumers' habits change, this is when companies try to, match that and come up with a solution to a problem that someone might have. And these new trends, they create new opportunities, they create new markets, and overall just market expansion. I think a really, really good example of this is streaming. So you used to have kind of in the old days, you'd have, stores like Blockbuster, or you go to the library, or you'd maybe even have to buy movies and DVDs individually if you wanted to watch them. And so, the trend was that people wanted to go and watch a bunch of different shows, a bunch of different movies, anywhere, anytime. And so this created a new business model for companies like Netflix and others like Hulu, Peacock, all the different streaming services that we have now today. And so movie companies and studios kind of joined in with those companies and say, how can we work together to, create this new solution so that people can, watch anything they want to whenever, wherever. And then investors kind of noticed when, Netflix started this and thought, hey, that's a really good idea. Let's invest in that. And as you see kind of on the screen here is, the Netflix stock has just exploded over time. It's, something that everyone knows about, everyone watches, things of that nature. And so this kind of turned this global streaming market, into a huge market worth billions and billions of dollars across the world. Um,
So now we are moving on to trying to pull it all together and talk about the connection between the market, the economy, and trends. So, like I said, they all work together. The markets show what's happening now and what investors think will happen in the future. And the economy shows how markets and jobs are connected. And the trends show what's changing and shaping the future.
And another really good example of how things are connected is the example of electric cars. And so these are also, a newer technology where, since cars were invented, it's been just the traditional, gas engine. And so this new trend of just clean energy, whether it's solar panels, whether it's electric cars, it's just a new trend of clean energy and, wanting to get away from, fossil fuels and things of that nature. And so kind of the market that came out of clean energy was companies making, these electric cars. And so you think of Tesla, you think of Rivian, you think of, a bunch of other different electric car makers. They, start with an idea of, hey, let's make this electric car. And then you have investors saying, hey, that's a good idea. I think it's going to do well in the future. And, putting their money into these companies. And then that connects also to the economy is, okay, once we have this great idea of electric cars, we're going to need jobs. We're going to need people to make these. We're going to need people to come up with new ideas. And so this is just adding to the economy of, creating new jobs and especially the automotive sector, and also just the industry as a whole just growing. And so, just to relay back the key idea here is trends are showing where we're going, markets show, what people think are going to happen, and the economy kind of connects it all in a cycle.
That brings us to our next poll question, and that is what trends are changing the economy now that you have observed?
So as we just talked about, we have a couple, previous examples of, still very new in the last 10, 15 years of, streaming that we just talked about and electric cars that we just talked about. Um, Depending on what you might have thought of, I think another big one is, just AI as a whole and how that's going to affect the economy, how that's going to affect new companies, how that's going to affect investing and how it already is. So I think that's going to be a big thing to just watch out for in the economy and how these AI trends change it going forward.
That does seem to be on the top of a lot of people's minds. That
100%,
AI. Yeah.
100%.
Mhm.
And while we've talked about a bunch today, we want to also briefly just introduce you to what our next webinar is going to be in December. And this is just an intro to building long-term wealth. We want to have a couple of points for you to think about before, attending that webinar, where we're going to want to be building good investment habits early. This can help the management of emotion-driven decision making and just, sticking to a system. That's kind of going with the next point of staying the course, avoiding market timing, being really disciplined. And those are just a couple of topics that, generate the best results in the long run. Developing an investment strategy and a plan that you're comfortable with can help you, keep your eye on the ball and stick to your specific investment plan and not worry about chasing the noise or trying to time the market or do anything like that. But we'll jump back quickly back into, a summary of what we talked about today.
Yeah. So just to recap, we talked about markets where that's where buying and selling happen. And people trade things that they value for a price that they can accept, and the seller, both sides have to agree. And the prices change with supply and demand. We also talked about that every purchase is part of a market, whether that be a lemonade purchase on a rainy or sunny day, or a grocery purchase. We also talked about the economy and how everything is connected. People, businesses, and government all work together. Everybody plays an important role in the economy and has an impact on it. And the jobs, spending, and production keep the economy moving. They all also play off of each other. And then when people spend more, the economy grows. And when they spend less, the economy contracts.
And finally, we talked about trends as well of, what's changing over time, what has changed until now, what's changing now into the future. So we think about new ideas, new habits, new technology, We just talked about electric cars. We talked about streaming, talked about AI. There's, a bunch of different trends that have happened, in the near future. We also have, this is what shapes people of what they buy, how these businesses grow. And then also it leads to investors looking for, what's trendy, what's going to do well in the future, where should I be putting my money for my long-term investments? And we want to kind of challenge everyone to, look at one of these things as a, summary of what we talked about today. So one thing is to look at, how trends are shaping markets and investing. So, look at a trend, look at electric cars, look at gaming, look at healthy food, social media, AI, a bunch of different things. And just do, a little bit of research and think about, what's changing, why is that changing, what different companies are part of that trend, and how is this trend going to change the economy? And these could be potentially good investments for you in the future. It's just good exercise to think about who's ahead of the game when we think about all these different trends that are going on right now. And finally, also a stock market simulation. This is a fun one if you're interested in investments. So you can pick a couple different companies that match different trends. So as we talked about, Tesla for clean energy, Disney for entertainment, Netflix for entertainment, and track how that company's stock prices, move over the next couple of weeks. Are there any big news headlines that talk about trends? Anything going on with that company specifically? Just kind of track and see, how is that doing as a company? And then, think about what are the reasons that you think the price either went up, went down, or stayed, about the same.
What's next? As we mentioned, the next session is building long-term wealth. And if you're interested in growing your knowledge, we have a couple of recommendations to make. One is the book I Will Teach You to Be Rich by Ramit Sethi, and also The Richest Man in Babylon by George Clayson. I'm not sure if I said his name right, but that's what it looks like. And then we also have a couple of podcasts to recommend, and one is Money Guy Show and How to Money. So if you're interested, check those out.
Yep. So we want to thank everyone for your time today. Like we mentioned at the beginning, now here's our contact information. If you have any questions or any follow-ups about, what we talked about today, feel free to reach out to either Heidi or myself, and we'll be, happy to answer any questions you might have. And then just another reminder that our next webinar is coming up in a couple of weeks here, in December. So looking forward to hopefully having everyone join that one as well.
Thank you.
Thank you, everyone.